Hi, I'm Amanda Hancock. I'm a certified financial planner here at CCR Wealth Management, and I also serve as my team's residence insurance specialist. Today, I'd like to discuss the importance of long-term care insurance. One of the risks we're all facing is longevity risk. This is the idea that we are more likely to live longer these days, which, as we all know, can be an expensive proposition. This begs the question, what exactly is long-term care insurance, and how can it help us manage the risk? That's where I come in. To put it simply, long-term care insurance allows you to maintain your independence and afford quality care should you need it. It also helps reduce financial and psychological stress that a long-term care event can impose on you and your loved ones. Other equally as important reasons for looking into long-term care insurance include to protect your savings, to give yourself more choices of care, and to help you consider your family history, such as the longevity and health of your family members. Health insurance and Medicare generally do not cover all the costs of long-term care needs. The main disadvantage, of course, is the cost of the premiums. Let's go over the mechanics of how long-term care policies actually work. Under most long-term care insurance policies, you are eligible for benefits when you cannot complete at least 2 of the 6 activities of daily living on your own. Those activities of daily living are as follows: washing, dressing, feeding, toileting, moving around, or transferring. The policy will begin to pay out the benefit once the elimination period has been met. This is usually a 30, 60, or 90-day period that you pay for long-term care services out of your own pocket until the benefit starts. Most policies pay up to a specific daily limit for a period of time or until a maximum limit has been met. Now, there are some flexibility in the types of care that these policies will cover. The first type is in-home care. This includes home health aid services that assist with activities of daily living. There's also hands-off care that assists with cooking, cleaning, and running errands. The second type of care is the community option. This includes adult day health care, which are social and support services provided in a community setting. Participants can opt to join planned activities with caregivers looking after them. Most programs either include some type of personal care, transportation, medical management, and/or meals. The last and most well-known type of care are the facility options. This type of care is offered through one of 2 mediums. One is the assisted living facilities, which are considered for those that don't need around-the-clock care. Or 2, the nursing homes, which offer a higher level of supervision and care for people needing help with not only daily activities, but personal care, therapy, rehabilitation, supervision, and lodging for usually 24 hours a day. A question our clients frequently ask whether long-term care insurance is something you should buy when you're younger or something you should wait to buy until you're closer to retirement age. Clients also wonder what factors go into the pricing of the policies. These are great questions, and here are the answers. The optimal age to seek coverage is usually between the ages of 55 and 65 years old. The cost of the insurance policy really depends on a variety of items, including your age, health, gender, marital status, lifestyle, carrier, and the amount in terms of coverage. The premiums are usually either paid in a one-time lump sum or over a period of time, such as 5 to 10 years. Finally, let's look at a couple different options for coverage. There are typically 5 different types of long-term care coverage options. The first type is self-funded, where a client doesn't purchase a policy and instead uses their own assets to pay for the cost of care. The next type of coverage is a standalone long-term care insurance policy. This type of policy reimburses you as a policyholder for the long-term care expense administered, whether it's in the home, in an assisted living facility, or in a nursing home. This type can be issued as an individual policy or can be offered by some employer group plans. The third type of coverage is a hybrid life long-term care policy. This is typically a life insurance policy with a chronic illness or long-term care rider attached to it. This is basically designed to accelerate the life insurance death benefit amount to cover those long-term care or chronic illness needs while the policyholder is still alive. Moving on, the other 2 coverage options are Medicare, which will pay for some services once specific conditions have been met, and Medicaid, which pays for certain nursing home care for people with low income and limited assets. Eligibility for both of those options are based on income and personal financial resources. And that's about everything you need to know. If you have any questions regarding long-term care insurance policies or would like an analysis of your current long-term care insurance needs, please contact me at ahancock@ccrwealth.com or at the number 508-475-3873.